So currently, European investors can already get access to US stocks through Revolut and other fintechs and brokers. What's so special about having stocks be tokenized?
Yeah, I mean, I think that I would think about the EU launch as serving two purposes. Number one, actually EU customers wanted exposure to stocks. We've been live in Europe with our crypto business for a little bit over a year. Mm-hmm. And while they love crypto, they want exposure to the US assets as well. And we actually sharpened our pencils because we have both of these businesses, right? And we figured out that the time to market and the speed for launching a blockchain-based offering was actually significantly faster than going the traditional route. And that got us thinking that in Europe, what we have the ability to do is actually demonstrate what Robinhood itself could look like built entirely on blockchain technology. So I think phase one, from a user standpoint, it will look very similar to traditional US stocks. The blockchain technology and the plumbing will be under the hood with some minor differences from what typical competitors offer. In particular, it's 24/5. So 24 hours a day, 5 days a week, which not many competitors have been able to figure out how to do. But where it starts to get really interesting is when we start plugging it into Bitstamp, which is when 24/7 trading becomes possible. And at that point, the stock tokens start to behave like other cryptos, Bitcoin and Ethereum. And then what I called phase three, which is full blockchain, non-custodial integration, is when you get all of the integrations to DeFi. So you could imagine swapping, collateralized lending and borrowing, and really self-custody, which I think would be very powerful for stocks because it would untether your stock tokens from any individual brokerage or crypto provider.
So you explained very colorfully on the chalkboard yesterday how stocks are held one-to-one with the token, custodied by Robinhood. So how does that work legally? Like, who has rights to the company? Robinhood as kind of the holder of shares, or the token holder? Like, does the token actually carry rights?
Yeah, so the way it works is the token is actually a derivative, and the underlying is sort of like held by Robinhood. So what the user is getting is a derivative that's backed by the real share.
Okay. And so when that is ported to DeFi, say it's used as collateral in lending markets, what happens if that's liquidated?
So the intent would be that it would be sort of like a stable coin, right? Similar structure where the shares are held in custody, and then the only time where a share that's custodied, a traditional share, would be liquidated is if a corresponding token was actually burned.
Okay.
So yeah, I think my understanding is, and of course, these edge cases, I think, probably are a little bit more complicated. But if it was liquidated in a DeFi protocol, the token itself wouldn't actually be burned.
Oh, so okay. I guess then it would have to like Robinhood would have to burn it to also like.
The mechanism for minting and burning tokens would go through Robinhood, at least for the time being.
Okay.